Hi, fellow traders. Well, this week was a little bit crazy with the Feds coming out with their announcement. Seems like everybody was kind of waiting for that day, and then after that day happened, we got some pretty good volatility, and then Friday we just went back into the cave. Um, so last week was really disappointing and confusing, and all of that in one. So we're going to talk about that, um, and I want to point out a couple things that I have noticed, and we can just move on from there. But one question I want to ask you guys before we start: what could your trading look like in 6 months? Now, I know I've got a picture of the boat here, and that's a big goal for your trading to look like that in 6 months. So yeah, probably not. But more realistically, in 6 months, you could be having a really good Christmas. Now, last year, I started with $1,000 at the beginning of the summer. We struggled through the summer, really struggled, but we learned some good lessons. Those of you that stuck it out, you we learned some good lessons. And then by the end of the Christmas, I mean by the end of the year, we had turned that $1,000 into just under 10,000. So I was able to wire out $4,800, and we had a really good Christmas. And it was just as special as the Christmas in 2014, which is the very first one that I was able to, wire out some in. So this is very realistic. This can happen. You may not be able to wire out 4,000, but you may be able to wire out 1,000. And for some of you, it'll be the first time that you've ever done that. So it is very, very doable. It is realistic, and it can happen. And I'm here, I'm not just telling you what to do, I'm doing it along with you. Win, lose, or draw, I'm trying to give you a roadmap, a path that you can actually see and watch as I execute. And so I think that is going to be the difference here. So, yeah, in 6 months, you can have a really, really good Christmas. So, just come join us. This is the last week that I'm offering that 249 special. You're going to see it disappear. But last weekend, Monday morning, it will be gone. And you want to check it out, just go to AverageJoeTrader.com/specials, and you'll see everything that you get. It's a 6 month deal that includes one-on-one mentoring time. I don't think you can beat it. And it's all about doing and teaching you the right skill set so that you can be a consistently profitable trader. Whether you want to do this full time, whether you want to do it part time, it doesn't matter. It's going to help you achieve your goals. All right, so here's what we're talking about. We can take a look at the SPY, and you can see Tuesday, and here's Wednesday. This is the day we got the announcement. And Thursday, and in the recap, Wednesday, I think that's the last one I was able to do. Um, I told you we were expecting it to gap up to new highs, or push up to new highs, and then maybe push from there before we got a big pullback. Well, we just did that on Thursday, and it just turned into a really, really bad day. Not much. We pretty much closed right under where we opened, and then Friday we got back down. So it's really, really sad. I expected a little bit better price action than this. I really did, but we're not. We just didn't get it. So whatever the case is, and I hope we get it cleared up next week, and we start to put in some good price action. It doesn't matter whether it's going up or down. I just want to see some decent price action that we as day traders can take advantage of. A lot of times the market just kind of messes with our day trades later on in the day. Initially at the open, it's just reacting to its catalyst and it's going to trade where it's going to trade. But later on, when things slow down, it starts to react to the market. And if the market's just kind of flat, then our trades end up kind of flat. So hopefully that will straighten itself out. So here's one of the things that I want to talk about. Now, one of the biggest questions I get, and the one that I'm going to really try to answer today with some examples, is it harder to make profit with a smaller account? And I can tell you absolutely yes. It is more difficult because number one, you don't have the room to give trades, you don't have the freedom to allow trades to work. Plus, you're kind of stuck in this price point. And if the stocks in that price point aren't really moving or working, then it's going to be a struggle. And that's what we've seen the last 2 weeks with stocks in our price point. They've struggled to really make good moves. So that's just something we have to deal with. We can't quit. We can't walk away. We can't make wholesale changes. We have to stay engaged and continue to execute our strategy when the opportunity presents itself. When the market turns around, we don't want to be caught with our pants down and doing something different. So, and here's one of the things I wanted to point out, and the reasons why I say sometimes we just don't have enough room to let things work. And here's CGC. We had perfect 5-minute open range breakdown. It started to work. Now, we were well on our way to getting to red to green test in the 200, or green to red test in the 200. But it turns around right in the middle of nowhere, and we start to push back up and end up getting stopped out because it pushed back over all of these moving averages. Now, one can say, Ed, you could have gave it 20 more cents. And yeah, I could have, but that wasn't the plan going in, and I didn't want to change my plan going in because ideally we don't want our stops to be inside of the first 5-minute candle. The stop really should have been outside of it, but my planning might not have been ideal for this trade, and I ended up getting stopped out before the move was made. Now, I apologize. It's going to be hard to see these on this chart because I made this with my laptop last night, and the resolution on the laptop is pretty bad. So, well, not bad, it's just small, and I have to figure out how to change it. But you can still see the little specks here. These are the arrows from where I got in and then stopped out. But you could see right after, we never did push over this. And we ended up working our way down. It took a while, but it worked its way down, and it could have been a winning trade. Now remember, we're trading with smaller size, so we can't really scale out. We have to wait for the logical first target, and we would have gotten it. So this is just what I'm seeing in the market, and you'll be able to see a little bit more when I show you how some of the trades worked on the 5K account. So this was a stop out, and then here's CUK. This one we had the big sell off, and then at the open, we were thinking profit taking or whatever the case is. It just ramped its way back up. I think the conference call started here, and then once we started coming back down, we got under VWAP and the 9. To me, this was a good continuation trade because we reject it up here and we get in, then all of a sudden it catches support here at 46 and it starts to push. So once I saw it catch support, that was it. I wasn't going to hold on to it. If it rejected again, I could get back in under 46, but this was according to plan. And it turns out it was the right thing to do because this one, as you know, ramped up. So this led for a frustrating day in this account, minus 49 bucks, but we managed our risk. And again, these days leading up to the Fed announcement was really, really tough. And it seems like the price point between $10 and $40, $10 and $50, these stocks were not giving us really good moves. So they were more difficult to trade with a smaller count, with a smaller size. And we could barely get $100, 100 shares on this. Next week, I probably can't trade stocks like this. It'll have to be stocks in the $10 to $30 range because we don't have the buying power anymore. So that's another thing. The more money that you pull out of your account, the less buying power you have. And so we have to reduce. It narrows the window of stocks that we could actually trade. So, in in a sense, I'm really glad that things are working out this way. It may be a blessing in disguise because if everything started working, then you probably would get the wrong idea. Here, we're dealing with the market not giving us what we need. We're not going to adjust anything that we do. We don't have enough time doing this to warrant any changes. And at the end of the month, we'll take another look at this and we'll see, do we need to make some changes or not. But right now, we're just going to continue to execute our same plan because, as you'll see, it's working with higher price stocks, but it may not be working in this deal. So at DRI, this one's one of the higher price stocks. This is one that we took in our 5K account. And remember, this is the one where we started last year, this time with $1,000. We got it up to 98, a little over 9,800 by Christmas. And we wired out. We started with 5K every month. And, we're just under 25 grand in these 6 months. And I'm telling you, this is realistic. It's not a far fetch. These are smaller trades using smaller share size, and it is realistic. Just like it's realistic to start with $1,000 and then grow it to at least 10 grand by the end of the year. So you could start with 5K a month. Then all of these are realistic and really attainable goals if you trust the process and you do it the right way. So here's DRI. Here's a 5-minute opening range high here. I get in. I wait for it to push the 100. I get in. Here's the pullback. Okay, this is the what we see happening here. If we look at what was that? If we look at CGC, well, I'll go with this one. You see the pullback. We get in. We see the bounce, and then it starts to work. I'm thinking these market makers, these guys on the other side of our trades, they're pulling things back, like here, or bouncing, trying to take out the weak people, the guys that get spooked. These are the ones that are watching their P&L and they get spooked and don't stick to their trade plan. And then the stock rips up and it starts making the move. And you can see we made it to the 200. That was the first goal here, but we made it to it. It kind of consolidated here, building up strength, made the next pop, and I ended up taking it on this level at 117 because it just looked like we were stuck here. But it didn't. We just kind of had to build up some more steam. We pushed up, hit the next target at 118.25, which I had to adjust because I took some profit here early. And then the final target was up here at the pre-market high, which was 119.50, and grab profit there. We got the meat of the move. Um, it can't be any more perfect than that. And we're using the same strategy that we're implementing in the smaller account. It's just that those smaller, lower dollar trades just aren't giving us what we need right now. They will, they'll come around. But I don't want to adjust too much. We may have to adjust profit targets. We may have to accept smaller gains, but we're not going to make any wholesale changes to our strategy because we see it does work. So DRI was really nice, textbook. And I wanted to show you this RHT. This is the earnings trade. It just didn't work. And the last two times this thing reported earnings, we did not get any gap, no movement whatsoever. And so we kind of expected it this time that maybe we'll get a move. I thought maybe to 190 or something like that, but we didn't get anything and ended up having to just take it off, pretty much flat, like $8. We just didn't get any gap, nothing. So this is just one of those that failed on us. Bottom line, it just failed. And fortunately, it didn't fail to where it washed out and it took some money from us. It just ended up flat. All right, so this was Facebook. I got in this on Thursday. You guys know I was looking for all day hold to the long side, and eventually it sold off all day with that crazy thing. But it came back yesterday. I think we're right back at break even. So, we'll see next week where this Facebook goes. The CGC, this one was on Friday. Here's another opening range. And I probably when I looked at this and I did the recap on this, I probably should not have gotten into this. Even though it looked like we had this strong push up and we were about to make this huge run, I should have been a little smarter than that. This was just a complete failure on my part to assess what was happening at the time. And so you can see, we actually came back and then I jumped short under here because I'm like, well, it looks like we're going to get that trend continuation, and ended up having to stop out here. Unfortunately, it just did not work for me. Two stop outs on this, it was really, really stressful. And then here, I didn't really trade this, so I don't have the um the chart up, but I should have captured it. But somebody who will remain nameless logged into the wrong account after I had logged out and was done after this CGC trade and actually helped me. So only lost $112 on this small account yesterday, thanks to that. But that's not my wheelhouse. That's his wheelhouse. And if like I always say, you have to find out what's comfortable to you and trade what works for you. And if that works and you're comfortable with it and you're able to manage your risk, then go for it. And that's kind of the realm that he's working in. So ended the day minus 112.88. Not the way I wanted to end the week, but like I said, it's kind of a blessing in disguise because it's it's a really good teachable point here to where we don't want, if it's not working, we don't want to make wholesale changes. We have to be consistent in how we execute our strategy in the market. Eventually, it's going to turn around and it's going to start coming to us. It happened last year. Everybody that stuck it out and then quit when the going got tough, it started working out. And you can see where we ended up at the end of the year. And that same account, starting over at 5K every month, we're knocking. You'll see here in a minute, we're knocking on the door of 25K. And all of those trades you saw right here in chat. All right, so KMX. This one, I did take this picture before I left, but we got in too late last night, and I could not get the final P&L before it reset at midnight. But you could see this was a really, really nice trade. It was a 3-minute opening range breakdown. I know this is the 5-minute chart that I took a snapshot of, but I'm trying to get in these on the 3-minute so that my mind can be free to focus on the 5-minute for the micro account. So I don't want anything overlapping in terms of trying to enter. I know it's possible that it can do that, and if it does, I'm going to defer to the smaller account. But when it works out, it works beautifully. And see, this is a great trade. I really should have taken some profit here, but I was looking for this green to red line, or yesterday's close. I was really looking for this. I thought we could get a quick dip down, but we didn't. Once it bounced, it never came back. So had it come back and kind of held us a little bit, I'd have just taken profit there. So I just had to let my plan play out, and we ended up just blasting through all of this and bouncing. And so took some off here, and then here I was looking to short it back, see if we were going to come back, because we made lower highs, lower lows. I thought we were rolling back over here, and it rips back and stops me out. But still made a pretty decent lick on this for the day. And we'll look at what it was for the day. But this was the only trade, I took for that day. 226.46 is what we ended up with for the day. In that account. And you can see only 932.86 for the week. It's a little bit slow, a slower week these last 2 weeks. Monday was a red day. Wednesday was really slow. I guess the morning of the Fed announcement was a little bit slower than normal. But not bad. We're still ticking away. We're $198.52 away from our goal. We have a whole week to go. So I could trade one day green and just shut it down. But I'm going to try not to let that get into my head and just, trade this week out and do what we need to do to make it happen. All right, so here's the equity curve. You can see we are steady climbing. Steady climbing. We haven't had a bump in a while. And, hopefully we won't have, to be a minute before we get another bump. We are going to have these. There's no doubt about it. We are going to have these bumps along the way. As long as they're fewer and farther between, that means we're doing our job. So really good on this account. Now the micro account we are struggling with. And like I said, it is more difficult to trade a smaller account. And especially now when we have the the stocks in our price point not really doing what we want it to do, not making the good moves. You can see we've got 5 red days, 2 days where we didn't trade at all, 2 really good green days. This is just a scratch. We could just say that's a scratch. So 2 good green days and 5 red days. Now, here's where I allowed things to get a little bit too out of hand. And this is just based on one trade. That's what the problem was on this. This is on 2 trades. This is just on one trade. And I have to do a little bit better managing my losses on a trade per trade basis. I can't really get too loose and allow things to stretch out. And this was a direct result of what happened the day before. And that's why I say you have to be consistent executing your strategy. And I wasn't. So we have to focus on being consistent next week. But we are going in the right direction. We lost less this week than the week before by about 30 bucks. So we're headed in the right direction. And we're starting our equity curve here, only 2 data points. So next week we're looking for a bounce. We don't want to go down. If we go down again, then I'm probably going to have to add a couple more dollars. We'll have to wait and put in another 500 bucks so that we won't be stuck not being able to use margin. So this is why you don't start right at 500 bucks, because you don't know what the market's going to give you. And if you start out with a couple of small red weeks or just one red week or one red trade, then you're done. So we had some room to work. I remember I went back and looked last year, starting with $1,000. I think we got down as low as just over 700 bucks before we came back around. So, we're pretty much in the same boat this year. So nothing new here. We're just ready to keep on pushing. So that's going to do it. That wraps up last week. So just remember, you don't start making wholesale changes. Just be patient. Let's continue to execute our trade plan. We want to get this number starting to go back in the right direction here. That's going to be our focus, is just executing our strategy. And that's what we have to do. All right, guys. So take it easy. Have a great weekend. And I will talk to you guys. Those of you that'll be here in the morning for our market strategy session and the swing trade watch list stuff, I'll see you guys then. If not, I'll see the rest of you guys on Monday morning.